Today's highlights. 3 key Bitcoin bottom indicators are active, 20 million Bitcoins are mined, and BlackRock moved $150 million in Bitcoin to an exchange, a major dump signal. Tuesday, March 10th, BitcoinTV Chinese by Billion Hezai. I'm Michael. Here is the top crypto data from the past 24 hours. We're here daily sorting through the most important Web3 events and key updates across all projects. And with our headlines, we aim to give you a quick overview of the data and market sentiment in just 3 to 5 minutes, so you can quickly grasp the latest temperature of the crypto market over the past 24 hours. Alright, for today's headline, let's first take a look at how prediction markets have recently set their sights on the 2026 US Senate elections. According to data from Polymarket, the Republican Party currently has about a 53% chance of winning, while the Democratic Party stands at 47%. Recent data also shows that support for the Democrats has been rebounding. Meanwhile, another platform regulated by the US Commodity Futures Trading Commission, called Kalshi, gives odds of 56% versus 43%. However, it's worth noting that prediction markets actually have limited liquidity, so a single large order can easily sway the probabilities back and forth. So you can think of these numbers as a kind of emotional thermometer. They don't necessarily represent the final election outcome. But based on our experience, there still isn't a stable relationship between US midterm elections and the price of Bitcoin. Right now, Bitcoin's price is influenced more by global liquidity, monetary policy, and market cycles. However, the makeup of the Senate does indeed affect crypto regulation. For example, if the Democrats continue to control the Senate, then regulatory agencies will definitely impose stricter requirements on exchanges and stablecoins. If the CLEAR Act and the VALIG 21 Act can be implemented, then industry uncertainty will actually decrease, making it easier for institutional funds to enter and provide support. Simply put, politics can affect the pace, but what truly determines the price of crypto is still money and market cycles. Alright, today I'm going to show you a new indicator called ELR. This is a leverage estimation indicator for Bitcoin, and recently this indicator has been declining. To put it simply, this indicator is calculated by dividing the open interest in futures contracts by the Bitcoin reserves on exchanges. It's used to determine how much leverage the market is actually using. Since February, this data has dropped from 0.198 to 0.152, a decrease of 23%. At the same time, the price of Bitcoin has fallen from around $96,000 to about $69,000. As soon as the price fluctuates, the market starts deleveraging. Some of the leverage is reduced voluntarily while some is forced liquidation, so naturally the open interest decreases. On top of that, with the current tensions in the Middle East, any fluctuation in global oil prices increases market instability. So many traders have simply closed out all their leveraged positions. Simply put, the leverage in the market is clearly cooling down now, and the systemic pressure is also decreasing. Alright, let's look at an on-chain signal today that deserves everyone's attention. The SOPR, Spent Output Profit Ratio, for short-term Bitcoin holders has dropped to 0.99, falling below the critical threshold of 1. To put it simply, this indicator means that short-term investors who have held their positions for less than 155 days are, on the whole, selling at a loss today. When the SOPR is below 1, it means the price at which they bought is higher than the price at which they are selling. In other words, they're stuck in losing positions, can't hold on any longer, and are cutting their losses and exiting. Historically, whenever the short-term SOPR drops significantly below 1, it basically means the market is very close to a bottom stage. For example, this indicator showed the same pattern at the bottom of the bear market in November 2022 and during the sharp drop in August 2024. So now, with this reading combined with a fear and greed index score of 13, which indicates extreme fear, both the sentiment and data on-chain are confirming that the market bottom is gradually emerging. You need to understand that when the weak hands exit, it's the opportunity for the strong hands to enter. This process takes time, but the direction is already clear. Alright, please like this video and turn on the notification bell. Every like you give is a strong motivation for us to keep updating daily, because we hope that by organizing this news, newcomers entering Web3 can gain an intuitive understanding and know what is happening in this world. Alright, for today's headline, let's take a look at our spiritual idol, Satoshi Nakamoto. In 2009, no one knew whether Satoshi Nakamoto was an individual or a team. Somewhere in the world, they wrote a string of mysterious and cold code onto the internet. At that time, no one knew what it was, no one knew how much it would be worth, and some even doubted whether it could survive its first year. 17 years have passed to this day, and we are standing at a historic moment in the year 2026. We often say that gold is scarce, but if you look at gold mines, new ones are being opened every year, and its total amount has never been capped. But Bitcoin is different. Bitcoin's scarcity is defined by mathematics, by logic. It is enforced by code. No matter how high the price goes, not a single extra Bitcoin will be produced. Up to now, 95% of Bitcoin's supply has already been mined and entered circulation. The remaining 5% will take another 114 years to be mined. Today, as we stand in the present, while everyone is most concerned about whether it's a bull or bear market, whether prices will rise or fall, the on-chain data has quietly written a much bigger story. True scarcity is accelerating its arrival. You should know that Bitcoin is, up to now, the most scarce asset and the hardest to buy in the world, and it will only become harder to acquire.
According to real-time on-chain data from the Clover Pro Bitcoin Explorer, at block height 940,000, the 20 millionth Bitcoin has been mined. 95.2% of the total supply of 21 million Bitcoins has now permanently entered circulation, with 1 million coins left to be mined. At the current stage, each block reward is 3.125 Bitcoins. After the fifth halving in 2028, it will drop to 1.5625 Bitcoins. From then on, the reward will be halved every 210,000 blocks, and the remaining supply will be released at an exponentially decreasing rate, with all Bitcoins expected to be mined in about 114 years. By then, miners' income will come entirely from on-chain transaction fees.
In my personal opinion, I truly believe that we're going to be at the full supply of 21 million coins in approximately 21 years. It is an incredibly unique and significant moment right now within the entire network. Maybe this is the one time in the network's history when you can look ahead 21 years and see 21 million. Specifically,
I expect 21 million coins at a $21 million price in 21 years.
In May 2010, the first Bitcoin purchase exchanged 10,000 coins for 2 pizzas, costing $0.0025 each. At today's price of $69,238, Bitcoin has surged over 27 million-fold since that pizza deal. Since 2026, Bitcoin has been suppressed by Fed rate policies, ranging from $65,000 to $85,000. This is a 36% drop from its $108,000 peak in Deets 2024. Post-halving, Bitcoin is consolidating as institutional buying continues.
Alright, so the guy who used 10,000 Bitcoins to buy 2 pizzas back then, now that amount is worth $700 million, right? Of course, this isn't a story about regret or not. It's a story about the gap in perception. How should we understand this? The buyer and the seller sit at the same table looking at the same number, but their understanding of the world is completely different. As of this year, 20 million Bitcoins have been mined. A lot of people are asking, will Bitcoin still go up? Please just drop the will from that question. What should the real question be? In a world where supply is shrinking and demand is expanding, how many Bitcoins do you have in your hands? Do you have any Bitcoins at all? That's the real question. Satoshi Nakamoto never designed any get-rich-quick scheme for us. So what did he design? He designed a mechanism that rewards those who truly understand scarcity over time. And this mechanism has been running for 17 years now, without a single mistake, not one accounting error. Alright, it's a bear market, so we need to give everyone a little pep talk, right? But the next piece of news isn't just a pep talk, it's actually closely related to your wallet. So what's going on? The big seller has arrived, and it's someone with a good reputation. Who is it? BlackRock? BlackRock manages $10 trillion globally, right? Today, they quietly transferred $150 million worth of Bitcoin into their Coinbase account. On-chain data doesn't lie, but on-chain data also won't tell you why they transferred it, whether it's for portfolio rebalancing or just an internal fund management issue. You have to understand, BlackRock never needs to make a statement to the market explaining why they're transferring funds. But there's something we need to say before this news. When the world's largest asset management company moves coins from a custodial wallet to an exchange, what should the market's reaction be? It's never nothing. This isn't just normal procedure, right? Because transferring to an exchange is the closest action to selling, this transfer introduces a significant uncertainty for Bitcoin at a time when it's surging. You all know, $149 million, once it enters the selling phase, that's not an amount retail investors can absorb. Can Bitcoin hold its key support level? This time we'll definitely keep a close eye on the on-chain data for everyone.
According to disclosures from the on-chain data tracking account On-Chain Lens, on March 9th, the on-chain addresses of BlackRock's IBIT Bitcoin ETF and Ethereum ETF transferred approximately 2,200 Bitcoins, worth about $149 million, and around 2,417 Ethereum, worth about $4.84 million, into a Coinbase Prime deposit address, with further transfers possibly continuing. According to Arkham Intelligence's on-chain records, the related transfers were executed in multiple batches of 300 Bitcoins each, all directed to Coinbase Prime labeled addresses. Donku notes that it is currently not possible to independently verify BlackRock's specific operational intentions.
I believe Bitcoin is legitimate. I'm not trying to say there aren't bad misuses, just like with anything else, but it is a legitimate financial instrument that allows you to potentially have uncorrelated or non-correlated types of returns. I believe it is an instrument you invest in when you're more fearful. It's also an instrument for when you think countries are debasing their currencies through excessive deficits.
Transfers from ETF custodial addresses to exchanges like these are typically interpreted by the market as preliminary actions for ETF share redemptions or institutional portfolio rebalancing, which exert direct selling pressure on spot prices. This is not the first time BlackRock has taken similar actions. Previous on-chain records show that it once transferred in 1,814 bitcoins, which is equivalent to 24,472 ether. Currently, the price of Bitcoin is about $69,238. If the above assets actually flow into the market, the key support level at $65,000 will face further pressure testing, so the market needs to remain highly vigilant.
Of course, BlackRock is a large institution, but behind large institutions are smaller ones, and behind the smaller ones are retail investors. So if a client wants to sell their holdings, BlackRock has no choice but to sell as well. This is determined by the client. And if you are one of our gold members, according to a model we use in our weekly analysis, it's possible that 60,000 may not be the bottom for Bitcoin. If there is an extreme wick down, it's also possible to see Bitcoin starting with a 3. Do you think if Bitcoin starts with a 3, you would go all in and buy like crazy? Let me know your answer in the comments section. Tron has become the top choice for settling 3 types of crimes. Has its efficient network become a hotbed for criminal activity? Bithumb has received a 6-month suspension warning. The Korean crypto scene is about to undergo a major shakeup. Alright, there's a report that really sends chills down your spine after reading it. A blockchain security firm called BlockSecond has released a crime analysis report on cryptocurrencies for 2025. All the data below comes from the report and does not represent the views of the platform or our own opinions. It put 2 public blockchains on the table for comparison. It says that Tron is a hotbed for criminal settlements, a channel for terrorist financing, and a place where funds from drug trafficking and human trafficking flow efficiently. As for Ethereum, it claims that because DeFi tools are so abundant, it has become a technical hub for money laundering. Even more striking, the report states that the HKEX exchange founded by Sun and Binance together received over 50% of scam funds on the Tron chain. When someone commits fraud on Tron, half of the illicit money ultimately ends up on Sun's platform. That number's really quite alarming.
According to BlockSec's 2025 crypto crime report, the Tron chain has become the preferred settlement network for terrorist financing, human trafficking, and drug trafficking funds due to its low transaction costs and high efficiency. Over 80% of scam funds on the Tron chain ultimately flow into centralized exchanges, with HKEX and Binance together accounting for about 50%. The Southeast Asian scam money laundering node, Howin Group, accounts for 2.73%, which is consistent with the findings identified by FinCEN.
Over the last few years, the use of crypto we've seen proliferate in a whole host of different crimes. For example, this year, we've seen about $2.7 billion in hacks on cryptocurrency businesses.
On the Ethereum side, DEXs account for 38.49% of the destinations for laundered hacked funds, while the mixer Tornado Cash accounts for 16.76%. The North Korean Lazarus Group was involved in a single attack on Bybit, amounting to about $1.5 billion. On-chain activities related to sanctions have surged by about $100 billion compared to 2024, mainly driven by Russia's sanction evasion using the ruble stablecoin ACA5 and sanctioned funds from the Howin Group.
In my view, the starting point of this report is highly problematic. You can't deny the value of a blockchain just because some illicit or gray market funds have moved through it. Ease of use is the same for everyone, and it also facilitates the efficient flow of legitimate funds, doesn't it? It also lowers the cost of transfers and remittances for everyone, doesn't it? Ethereum's so-called original sin is that it's too simple. Things like DeFi, cross-chain bridges, DEX, and mixers can clearly and straightforwardly form a very complete money laundering pathway, so Ethereum is seen as having an original sin. But as a blockchain infrastructure, Ethereum also provides an excellent operational foundation for reputable projects like the base chain, doesn't it? We shouldn't throw the baby out with the bathwater. Just because dirty money circulates on it, we can't deny the value of the entire platform. Everyone needs to understand what money laundering actually is. Last night I was joking with a friend from outside the crypto circle. They asked, "What have you been doing since you left the satellite TV station?" I said, "I've gone into the gray market." In quotation marks, of course. He said, "That's right. Any money that hasn't been taxed is considered dirty money." That one sentence really gets to the heart of the matter. Whether something is clean or not is up to you to decide, not for others to judge. What do you think? Now that we've entered a decentralized world, can't we stand up and speak instead of talking on our knees? So I think there's a big problem with the starting point of this report. Last week, I had the privilege of a brief meeting in Singapore with the son of South Korean President Lee Jae-myung. We talked a lot about Web3 topics. He told me that in Korea, regulations on the 3 major cryptocurrency exchanges will become increasingly strict. Issues like anti-money laundering compliance, thoroughness of customer identity checks, and whether there have been any financial transactions with overseas crypto asset service providers will all be subject to even stricter scrutiny in the future. And as you all know, in a rather dramatic turn of events, just 2 hours after our conversation, he realized he had lost his passport. I accompanied him to the police station in Singapore to report the loss. Once everyone found out about his identity, the Korean embassy in Singapore issued him a new passport within 15 minutes. My feeling is that in the face of absolute power, ordinary people are truly very weak.
According to local media reports, the Korean Financial Intelligence Agency has issued a sanction notice to BitHump, proposing to partially suspend its operations for up to 6 months for violating the Act on Reporting and Using Specified Financial Transaction Information. The violations involve dealings with unregistered overseas virtual asset service providers and deficiencies in customer due diligence. At the same time, the FIO has issued a warning to BitHump's current CEO, and the final sanctions are expected to be determined in late March.
Regulators warned that such lapses expose the platform to illicit finance risks, highlighting the FSC's zero-tolerance stance. South Korea's strict framework under the Specific Financial Transaction Information Act and the Virtual Asset User Protection Act demands robust customer due diligence, pre-launch risk assessments, and careful oversight of virtual asset service providers.
If the sanctions are implemented, newly registered BitHump users will be prohibited from withdrawing virtual assets. This follows the Feb 6 incident when the platform mistakenly gave 2,000 BTC instead of 2001 as a promotion, sending 620,000 BTC to users, worth about $43 billion then. Regulatory enforcement continues to intensify. In November last year, Upbit's parent company Dunamu was fined 25.2 billion Korean won and suspended from operations for 3 months. In December 2025, Corbett was fined 2.73 billion Korean won. Now, BitHump could face up to 6 months of suspension.
In the crypto world, regulatory compliance has always been a hot topic on the table, but deep down I've always thought, to hell with regulation, to hell with KYC, I don't care about any of that. As a retail investor, as a seasoned veteran in the market, as an individual user, I would rather use Web3 and decentralized methods to manage my assets. As long as I control my private keys, that's all I need. It's always the centralized institutions like exchanges and payment centers that need to comply with regulations. If you're a Web3 OG or a seasoned trader in the digital space, you'll know how to use decentralized methods to protect your financial privacy. Because only when you hold all your rights and privacy in your own hands can no one infringe upon your interests. If you understand what I'm saying, give this a like. All right, let's take a look at today's news update.
Trump stated that the Iran war is basically over, causing geopolitical risk sentiment to cool rapidly. Crude oil dropped more than 3% that day, and risk assets rebounded accordingly, with Bitcoin and Ethereum bouncing back in sync. Once again, the market has confirmed a pattern. When macro risks ease, crypto prices tend to rebound even faster. According to Bloomberg data, the U.S. spot Solana ETF attracted about $540 million in the fourth quarter of 2025, with investment advisors purchasing over $270 million. Institutional funds are now spreading from Bitcoin ETFs to altcoin ETFs. Sol has become the first to test the waters. U.S. banking lobby groups are considering suing the OCC because the regulator has issued banking licenses to crypto companies such as BitGo, Ripple, and Paxos. Traditional banks are worried that competition will be disrupted. The regulatory battle between crypto and traditional finance has escalated once again. The U.S. Department of Justice has requested that the retrial for Tornado Cash developer Roman Storm be scheduled for October 2026. The core issue of the case is whether tool developers should be held responsible for the actions of users. SharpLink Gaming has added Ethereum to its corporate asset reserves, but the drop in ETH has led to a book loss of $735 million for the company, with about $616 million of that coming from unrealized losses on ETH holdings. The company plans to buy more, which has caused a stir in the market.
All right, here's today's brain teaser. A lot of people treat AI as just a tool, like a search engine, right? Let me tell you, that's an ancient way of using it. But true AI agents have already started to be treated as team members. In the future, company structures may no longer consist solely of human employees, but rather collaborative systems of human staff plus AI agents. One person, paired with 3 agents, could accomplish what used to take a whole team a year to complete. What does AI handle? Execution, organization, and analysis. What do humans handle? Judgment, creativity, decision-making, providing direction on what needs to be done. Real competitiveness is no longer about whether you can use AI, but whether you have built your own AI system. AI won't replace people, but it will replace people who can't use AI. That's all for today's program. Here are all our membership benefits. We hope you'll join as a member so we can work hard together and gradually become wealthier. See you tomorrow.